So in the days of rising interest rates, rising taxes, rising fuel prices, you may look at ways to try to reduce some costs. What about your insurance? Can you reduce your insurance? Maybe it's for your auto, your homeowners, your business insurance. Today we're going to talk about ways you can reduce your cost of insurance, your annual premiums. We'll talk about homeowners, but some of this may apply to vehicle, auto, and also commercial lines insurance. One thing to look at is your deductible. If you're carrying a very low deductible, that's going to affect your premium quite a bit. Let's say, for example, you have a $250 deductible on your homeowners or on your auto. What that means is if you have a claim, you'll pay the first $250 and then the insurance company pays the rest. So if you have a $5,000 claim, they will give you $4,750. You pay the difference. That low deductible might be jacking up your premium quite a bit. What if you went to a $1,000 deductible? Well, you'd pay the first $1,000. Well, instead of getting $4,750, you'll get $4,000. Yeah, you'll have to come out of pocket more money, but you have to weigh the odds. If you have some cash, if you have the $1,000 liquid cash, if you're not just living paycheck to paycheck, you might find that raising your deductible to $1,000 can really cut your premium quite a bit. The other reason why a deductible is in play is if you intend to make a claim for a low amount. What if you have a $700 or $600 damage to your car or to your house? Well, in reality, if you have a claim that low, you probably don't want to put in a claim anyways, because all it's going to do is get you a very small amount of money, and it's going to raise up your rates. You'll now have a claim on your policy, on your claims history. Insurance companies run CLUE reports, which are claims history reports, even if you change insurance companies. So it usually is not a good idea to put in claims for small amounts of money. It doesn't benefit you that much. Remember, we're insurance agents and brokers, but we're not your insurance agent. So before you take action on any of this advice, make sure you get good feedback from your insurance agent in your area that covers your property, or maybe get legal advice from an attorney. This is just general advice. It doesn't apply to everybody, but it's just a good rule of thumb. Also, make sure you're not putting yourself in financial harm. Remember, the reason you have insurance is to protect you from having an expense you can't afford. So if you can't afford paying $700 for damage to your car or to your house, you probably don't want to have a high deductible. But in most cases, if you have the money, you'll save a significant amount. And remember, you don't have claims every year, or you probably shouldn't have. What about in your homeowners? Are there any coverages that you have that you may not need? Do you have any high value items, cameras, jewelry, that have scheduled coverages? How much does that add? And is it worth it? Maybe it is, maybe it isn't. One thing you might want to add if you're worried about catastrophic claims is adding coverages on the other end, the high end. If you have, let's say, a $1 million limit on your policy, you might want to add an umbrella policy that raises it up to $5 million. For most consumers, if you add on an umbrella policy to your existing homeowners or auto, or even your commercial lines insurance, it might only add a few $100s a year to have broad coverage in over and above $1 million. Because here's the thing, think about your claims. If you have an $800 claim, it's not going to bankrupt you. It's not going to put you out of business. But if you have a $3 million claim and you only have $1 million in coverage, that could be a deal breaker. So look at, if you're going to spend the extra money, put it on the back end of your policy, put it on the top end, and ask your broker or agent about an umbrella policy, even a commercial umbrella. Because those are the things that can really help you avoid a catastrophe. The $300 or $400, $800 claim is not a catastrophe. Matter of fact, I just had an incident back a few months ago where I was driving down the road, a truck went by, a big rock flew off the truck, smashed the window of my vehicle. Now, some states have automatic glass coverage on policies. In this particular instance, there was no coverage. The windshield cost $600. I have a $500 deductible. I could have put in a claim and they would have paid $100. Is it worth it? No. So I just came out of pocket, bought me a windshield. And those are the kind of long-term decisions to make, because putting in a claim to get me $100 is not going to really affect finances, but it will affect my rates going forward. Are you driving less? Maybe you can have a mileage adjustment to your policy. What about in your homeowners? Are there any endorsements that you're not using for additional coverages? What about in your commercial policy? Are you at the same location? Do you have the same square footage? During the pandemic, many people downsized, less employees, less office space, less retail space. Those can cut your premiums. Go through with your agent if there's any line items that can change that would reduce your premium. You might find some savings there. You don't want to reduce coverage beyond what you really need, but there may be things that are just costing you money without having a benefit to you. Remember, rates are going to go up generally anyways with inflation. Once the insurers start to see claims come in at higher prices for repairs, for materials, they're going to have to factor that into your premium. So that's going to start happening anyways in the next couple of years. So you may want to do some things to offset some of that increase to keep the money in your pocket.